Welcome to Muffet Investment Views. REITs offer a unique opportunity to invest in real estate without the hassle of managing properties yourself. With the decline in interest rates, the borrowing costs for REITs are starting to decrease, and this has boosted their profitability. This means that they pay out more in dividends. Lower rates can also drive more investment into the real estate market, pushing property values up. So the market is starting to become more favorable for REITs. If we look at the REIT stocks, you can see breakouts galore. But one of the REITs that got our attention is LTC Properties, and we are going to present them to our followers. This is just investment research and not advice. We bring to your attention the stocks that we think are good opportunities, but we advise viewers to do further research on these stocks before making a decision to deploy your hard-earned money. If you are new to this channel and have not subscribed yet, please subscribe to the channel and like the video to help the channel. LTC Properties is a real estate investment trust investing in senior housing and care properties mainly through sale-leasebacks, mortgage financing, joint ventures, and structured finance solutions including preferred equity and mezzanine lending. They trade on the NYSE under the ticker LTC. They have a market cap of $1.5 billion and an enterprise value of $2.4 billion. Their current dividend yield is 6.2% and the debt-to-enterprise value of 36.4%. So, why do we like this REIT? This is because they have positioned themselves into a demographic trend that will pay huge dividends as the U.S. baby boomers age. The U.S. senior population is expected to grow from about 20 million to 40 million by 2040. The population of people over the age of 80 is expected to grow from 15 million to 20 million in 2030 at a compound annual growth rate of 4%. More than 4.1 million Americans will turn 65 each year through 2027, generating a need for senior living accommodation for years to come. The U.S. population over the age of 85 years is expected to hit 11 million in 2035, and this will increase the demand for the assisted living facilities and dementia care facilities. Senior housing provides a continuum of care from the least acute to memory care patients living with dementia. The operating margins are highest for independent living at 37%, but the margins for other types of accommodation is still lucrative at 20 to 25%. The baby boomers hold about 50% of the total wealth of the USA at about $78 trillion. The rents that these boomers pay are quite affordable compared to their growth in wealth in recent years from rise in property and asset prices. So, in our view, the senior housing REITs are in a sweet spot from rising demand from the wealthy baby boomers and also from falling interest rates as interest payments is one of their biggest outgoings. The 10-year yield looks like it will fall to around 3.8% in the coming months. We can see this in the breakouts of several REITs, but particularly the senior REITs. These are the share price charts of Welltower, Omega Healthcare, and Ventas, which are big players in the senior housing game. Folks, we are in a secular trend that will last for the next 2 decades. So at Muffet Investments, we like the sector very much. This is a slide from their investor presentation as to why LTC is a compelling investment opportunity. They have a good management team, they pay a monthly dividend which was not stopped even during the COVID pandemic, and they have a conservative and strong balance sheet. Their properties are distributed widely over different states. They own 127 of their properties with a total investment value of $1.3 billion. They have a further 46 properties through mortgages with investment value of nearly $500 million. Majority of their properties are assisted living facilities at 117, and a further 77 of the properties are skilled nursing facilities. They pay a monthly dividend of 19 cents, which has been consistent for the last few years. They are consistently investing in further properties and have invested nearly $700 million since 2019 despite tough conditions. The share price of LTC properties had fallen with rising interest rates from 2022 onwards. But after a long period of consolidation, the price has broken out, as you can see from the chart. The 20-week moving average has crossed the 50-week moving average, which is a bullish sign. If we do a ratio chart FOLTC over S&P 500, you can see that the price is starting to break out of the downtrend. We think that this breakout will last as long as the interest rates continue to fall. Risks associated with LTC. The main risk with this investment is credit risk. They are very sensitive to interest rates as their profits are closely linked to interest rates. So any condition that will increase the interest rates will result in reduced profits and dividend cuts. Also, if there was a financial crisis, they may not be able to refinance their loans. So they can have big drops in share price if that were to happen. On the positive side, if the interest rates continue to fall, then this company will grow and also be a takeover target of other bigger players in the future. We hope you liked this video. Please like, share, and comment, and let us know what you think of LTC properties.